Hello everyone, welcome back to my channel. So this video marks the end of the week number 63 in this Road to 100k Realized Return Challenge. And this has been a week that continued to be dominated by the government shutdown in the United States. And because of that, no economic data was announced, was released, aside from very few or very insignificant economic data, such as, for example, here the consumer credit, or this one is a bit more important, the consumer preliminary, the consumer sentiment as a preliminary for October. However, given the day that this occurred, which was yesterday, October 10th, this reading became completely meaningless on the grounds that what happened yesterday. But as a result of this, and looking at the trades that we did, those were the trading week went on pretty much smoothly. We managed to accrue over this week, and let's see how much we did. So if we put here a 0 and a 0 here and we sum all this, so we basically came away with a, a profit in premiums, $1,625 dollars for the week, which is not bad at all still. However, and just to make a brief recap of what occurred during the week, we started the week by selling some QQQ puts, keeping in mind what happened, what I said that I would do last week, because we would try to strike a balance between the QQQ and the IWM depending on which options were more appealing at the time of the trade. And because the IWM premiums were not very good on Monday, we decided and basically sold 5 puts on the QQQ, which was the best that we could hope for. So we managed to get $290, which, and these puts expire worthless. For the next day, we managed to also get 12 puts on, to sell 12 puts on IWM with a 246 strike price, and we also sold a put on the XLF expiring at the end of the week, and we collected a pretty good premium for this. And these IWM puts also expire worthless. We kept these 336. Actually no, I'm sorry. So basically these puts were assigned to us, and we were forced to buy them at 246. This is correct, and that is why we had this IWM shares assigned here, as you can see. Yeah, and but however, these were assigned back because we managed to sell these 12 calls on IWM on Wednesday, and these were assigned, and so we sold at the same price, also 246. So we broke even, and so we as a result of this trade, we collected the 336 and the 253, and this ended up resulting in a profit, net of premiums, net of commissions, $599 and $43. We also sold a put on ARKK on Friday here, as you can see. It's also over here. Yeah, and we managed to get $30 in premiums as well over this contract. Now, for Thursday, we sold some puts on IWM here. Yeah, these ones right here, and these also expired worthless, as you can see here, even though they at some point they were in the money, but still they managed to recover before the end of the day, and so these expire worthless. And then it came the big day, which was yesterday, Friday, in which we did the same thing. We tried initially to sell puts at 244 uh, at the beginning of the session, 244 strike price. However, the premiums became very irrelevant early on for the 244 strike price, and so in order to get some a good size premium out of the puts that we are going to sold, we decided to go up $1 on the strike price and sold 12 puts at 245, and we managed to collect 31 cents per piece. So this gives us a total amount of 372 less commissions. And at some point in time, these options these puts were worth very little in the trading day, but I was not available. I was not looking at the screen. I was not able to be next to the platform for the whole day, and the news came out that U.S. President Donald Trump threatened China with new tariffs and big ones as a result of the restrictions on trading that China is placing on rare earth material, rare mineral earths, and because of that, U.S. President Trump decided to also up the stakes with a threat of new tariffs on his own. And from the perspective of the investors, this basically meant that, all right, the supposedly upcoming trade deal between the US and China is pretty much in the doldrums. Most likely it will not happen. And given this new development, the market had a big meltdown. Here you'll be able to see that the S&P 500 came down by 2.7%, the Nasdaq by over 3.5%, the Russell 1000, which even though IWM is on the Russell 2000, not on the Russell 1000, but even the Russell 1000 came down by 2.68%, and in the case of IWM, which was trading at around 246 at the beginning of the trading day, it basically came down all the way to 236.29. Here was the point at which the threat of new tariffs was done. Here at 5 o'clock here, so very early into the trade, and from that point onwards it was pretty much downhill all the way until the end of the session, and because of that we were aside the 1200 shares again, and of course, as you can see here, given the fact that we use a 245 strike price, with this price which is much lower than 245, chances are on Monday we will not be able to sell 0DT options on the IWM. We will probably have to extend the maturity to 3 days, 4 days probably, in order to get some premium. Otherwise it's going to be very difficult to get some premium out of these shares that we bought. And I believe that the XLF, which had a strike price, the put that we sold at a strike price of 53.5, and given the low volatility of this ETF, the fact that it is $1.46 below our cost basis, I'm not even sure that the 1 week option will be available for us. The 1 week with a strike price of 53.5. So probably we'll have to extend this for 2 weeks. And because we have also the buying power left, we will try to lower our cost basis as well by selling puts at a much lower strike price, probably at around 52 or even 51 in a half. And so, given this situation and given the restrictions that we will have on trading the next week, I am very much sure that we will not be able to get the same amount of premiums that we were used to get. For example, this week we managed to rack up $1,630. I'm fairly confident that we will not be able even to reach $1,000 by the end of this week because of the time to maturity restrictions on the stock on the options. But yeah, it is the way it is. We will try to navigate the market the best way we can. Apparently, and after the pre-market, after the market was closed, there was this big candle over here. This might tell us that perhaps some recovery can be on the cards for Monday, and this was all pretty much an overreaction by the market when this threat became public. But yeah, we have to see what happens. We will continue to do our best to weather this storm in the best possible way. And so yeah, for now, this is all. The next week we will be back to a normal week. I will have, as usual, the time to do the videos at a normal time. This week was rather an exception, so stay tuned for that. But for the time being, this is all. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need me to ask any questions. And also, of course, feel free to like the video and subscribe to the channel. And we will reconvene on Monday evening or on Tuesday morning to open up and to begin the week number 64 in this challenge. And I'll see you there.